Hello, friends. Considering the way the equity markets have been behaving, there's been a fair bit of correction that has already happened. The view that principal mutual fund is kind of holding is that equity markets are getting extremely attractive, and one of the reasons for that is because if one were to kind of compare the equity yield and the bond yield, there is a clear case of shifting some bit of portion of your investment from the bond portfolios to the equity portfolios. And here is why. If one were to look at in the last 5 years, equity yields have actually gone up from 4.9% to 5.9%. At the same time, bond yields have actually declined from 8.6 to 6.4, and perhaps it's coming down further. To put it in a different perspective, if one were to look at from a PE perspective, equity markets price earnings multiple over the last 5 years have fallen from 20.6 approximately to about 17 currently. Whereas if one were to look at the bond market price earnings multiple have actually gone up from 12 to 15.6. So this is a clear case in terms of equities becoming much more attractive than bonds. So our recommendation clearly is to kind of shift some portion of from bonds to equities, taking advantage of the massive correction that we have seen in the last couple of quarters in the equity markets. Yeah. One dilemma that investors often face is that the position of the mid caps in terms of their own portfolios. This is primarily because mid caps have corrected a lot. But having said that, I think this is perhaps a good time to actually relook at mid caps, and maybe even increase allocation over there. Just to give you a perspective, since the beginning of 2018, when mid caps were actually trading at almost a 40% premium to the Nifty large cap index, today they have actually corrected and trading at a historic low discounts of about 14%. This again, clearly states that the correction in mid caps, which is happening, at least selectively, a lot of stocks are coming in the attractive zone. In terms of allocation between large and mid caps, I think it's a good time to kind of increase, the allocation towards mid caps as well. Along with increasing the equity position in the overall asset allocation framework. In terms of some of our schemes, if one were to look at the conservative investor in India, if you look at the equity holding position, it is extremely low compared to some of the global markets. Today, a lot of people continue to invest or rather park their money in bank deposits, which account for a very large portion of their overall investment, financial savings. So this is a great time to kind of switch a little bit of that money into equity products, especially the conservative equity products like Principal Balance Fund, Principal Equity Savings Fund, etc. For the slightly evolved investor or the slightly, investors who can actually take a little bit more risk, a multi-cap strategy would really work better, and the principal multi-cap growth as well as the principal multi-cap focus funds would be the best place to be in. For investors who are looking for slightly more returns or slightly higher returns, investors with a slightly higher risk profile, we would recommend the Principal Emerging Blue Chip Fund and the Principal Small Cap Fund. Thank you very much.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.